Do you want to start a thriving real estate career, but don't know where and how to start? Do you want to become a successful realtor or investor, but lack the required knowledge and skills? Gear yourself up with the best and actionable advice here on the Real Estate Rundown. Tune in as Shannon Robnett talks with industry veterans about all kinds of asset classes, market trends, challenges, management techniques, and success stories. Listen to informative discussions with valuable tips that will serve as the foundation for your incredible real estate venture. Now, here's your host, Shannon Robnett.
Hey guys, welcome back to the Real Estate Rundown. Listen, you're going to want to tune into our next episode where we use Neil Wahlgren as our guinea pig, because it's not all the time that you get to use somebody who used to be in the Air Force and fly C-130s that's now in the real estate world as somebody you can throw questions at and get him to answer them. Guys, we're going to find out what 100 countries Neil Wahlgren's C-131s and triple net investments have in common. So you're going to want to tune into the Real Estate Rundown and see what that's all about. Hey guys, welcome to the Real Estate Rundown. Thanks for tuning in. Guys, you are in for a treat today. I've got a good friend of mine, Neil Wahlgren, on the show. Neil, say hi.
Hey, how's it going?
So Neil is a fellow pilot, right? Neil, you were just out flying this morning?
Yeah, actually, I just got my mountain checked out, flying up to Tahoe.
Nice. So I just went flying in the mountains as well. That's something we share in common. Neil, you started out in the Air Force. You went to over 100 countries. You're now in commercial real estate. Take us through that journey. Help us understand what your background is that qualifies you, or how ordinary people can do what you do, how you got to where you're at and what you're doing.
Yeah, no, it's a great question. I've always thought that I find the backstory on how people kind of stumbled into real estate, especially commercial real estate, kind of interesting, because I feel, at least from my personal experience, very few people go directly into it, say out of high school. Most people pursue maybe a tangential or a totally different path before they end up in that real estate journey. But mine was, I would say, unrelated at first. I grew up in the San Francisco Bay Area, very much suburbia, consistent, safe, predictable. And, I was 18 and wanted the polar opposite. So I decided to go to the Air Force Academy. Ended up getting a pilot slot, worked through a couple of years of flight school, and ended up flying the C-130 Hercules. So I got to do that for, I guess, almost 10 years with the Air Force, and then for a few additional years with the Navy Reserve. Got to take it all over the world. I mean, over 100 countries, like you mentioned, then 2 combat deployments, Iraq, Afghanistan. I lived in Tokyo for 4 years. And really just a great way to kind of experience the world and, kind of transition from a boy to a man, if you will.
Neil, and it's funny because I wanted to go into the Air Force also right out of high school. They looked at my grades and said, maybe real estate is for you. So I got the do not pass go, do not see the world, do not get your own airplane, get out of here. But, what did the military teach you about business?
Yeah, and honestly, I would say 2 main pieces, and this might even be more specific to the flying world, but you can apply it to a lot of kind of operational fields, which you see a lot of in the military, and that's checklist discipline and also operational risk assessment. And so, we'll talk about the first one. Flying is this very complex machine that's been, refined over the years, ever since the Wright brothers put their first contraption in the air. Most aircraft really are just iterative improvements. And, there's not a lot of huge groundbreaking changes. It's just, small incremental pieces that make them better, faster, lighter, stronger, et cetera. And really, I mean, you can attest to this, that checklist discipline of getting, hey, here's a sequence of events that works. And this is, really a culmination of, tons and tons, decades sometimes, of people that have tried different routes and, ultimately kind of settled into, this is truly the best way to start a plane, to take off, to do airdrop, to do short field landings, to do all these pieces. And, to adhere to this checklist that's proven and really refined over time. I found that piece is kind of transferable to the real estate world with what we're doing, everything from tackling a project, from acquisitions to, placing debt. Especially, my focus is more on the capital raising side. I mean, just the consistency and the process and the methodology of that, I find has a huge amount of parallels with the flying world.
And that's true. The other thing that I would see that I love about being in the air is that in the real estate world, it really is three-dimensional. You can go up, down, or sideways, and you can't do that with a car, right?
That's very true.
Forward, backwards, you can go right and left, but you can't go up or down. And sideways without your turn signal, yeah, we all know that person, right? But it's funny because the other thing that I love about flying is when I've had a terrible day at the office, I can go get in the plane, I can shut everything off, and it's just enough that it takes my mind right out of my problems and right back to the
Yep.
and I can see everything clearly. And it's funny how often I solve my problems in the plane.
I agree.
Right?
And I love taking friends up, but there's something kind of magical about just being up by yourself. Just with you and your thoughts and your noise canceling headset,
Exactly.
you can get some heavy thinking
That
going
is
on.
one of the best things that's ever happened. I know that Orville and Wilbur would have gotten one if they'd have known about it.
Oh, hands down, right?
So Neil, you did your stint in the Air Force, you went to the Navy. Thank you for your service. We appreciate it. We need more people like that are willing to take on combat for our nation. Where did that leave you? You're out of the military. All the excitement's gone. What's next for Neil?
Yeah, I hit I would say a kind of inflection point in my flying career with the military where I kind of saw, all right, I either stay in and, continue and maybe fly a little less and, keep going to the same places and take more admin jobs. And, it would have been okay, but it didn't, to quote Marie Kondo, it didn't spark joy, right? And I love that phrase and I probably overuse it, but, I think there's, if what you're doing is not sparking joy, making you genuinely happy, I mean, pivot, do something else, find something new. And, that really is what I did. And so I kind of went back to the drawing board and said, all right, well, we could go fly commercial. That was kind of the same boat, flying for.
That would, Cincinnati to Cleveland twice a day.
Oh man. It's depressing even thinking about it for me, but no slight against I have plenty of ex-military friends who are now in the commercial world, but it's certainly not a career field for everyone. And for me, I needed maybe something that where your upward mobility is more tied to your skills and energy and competency as opposed to seniority and when you got hired. So I think that was one of the big shifts there. So I kind of did what anyone does when they're not happy with the world that they're in. You do the polar opposite again. So I went from big kind of bureaucratic big military to a small startup in Southern California, and it was neat. It was a renewable energies company. I was employee number 40, I believe, and the company had a technology effectively of taking waste wood feedstocks like forest residues, woody type of materials, cooking it in a technology called pyrolysis, similar to how you make activated carbon, but different set of parameters. And they could actually extract hydrocarbon-rich vapors that went on to become the aromatic portion of gasoline.
I've transported into an episode of Breaking Bad.
And then you cook it, add some blue food coloring, and you got yourself a TV deal.
Awesome.
But no, it was fun. And the other side of the technology was this kind of black granulated material called biochar. And these guys, they knew it was effective for enhancing soil, improving growth, just a number of soil benefits. But there wasn't really a market for this particular, asset class in the soil world, I guess you could say. And so I got to run business development, and we were bringing it to market in retail channels with horticulturists, with UC Davis and big research grants, and it was really pretty fun. Ultimately the economics of the company didn't quite shake out, and the company ended up going under a few years later. But it was really, I think it, really planted the seeds for me of this kind of, startup entrepreneurial, your net worth can be associated with the, amount of risk and the amount of time and effort you put into kind of a new field. And that really resonated with me. And, ultimately when that company, started to wind down, I had an opportunity to move up to the Bay Area, moved to San Francisco, ended up getting connected with the husband of a family friend of our family, who had a company somewhat established, raising equity for real estate deals. And I think a mixture of kind of the idea behind it is numbers based, quantitative. Something the underwriting wasn't too crazy, and the personal connection. There was an opportunity to come join the team, and that ultimately, somewhat by chance, but the timing lined up for me to make that transition over to the real estate side. This was about 7 years ago.
So again, processes played a part because you're taking a product, you're turning it into something, you're marketing it, you're doing all aspects of that. So again, processes take a part. Now you're with a capital raising outfit that's doing real estate stuff, or you're the capital raising part of that. Is that what I understood?
That particular company was strictly capital raising, and what they would do, their business model was to partner with operators or developers who had, a skill set putting together a deal, lacked access to their own capital or their own investor pool. So we would effectively be the equity arm as a JV partner through the life of that deal.
Awesome. And so how long were you there? I mean, you walk in the front door knowing how to make biochar and how to fly one of the largest aircraft on the planet, hauling tanks and all kinds of stuff, straight into the real estate grind, right? How long were you there?
Yeah, so spent I guess just a little over 4 years there, and ultimately I got my MBA, and the quantitative side of things has always been somewhat easy for me. So I think that probably helps in kind of understanding, both, hey, here's a new concept, but really it's inputs, outputs, right? You have your inputs are rents, your outputs are expenses and your debt service and your distributions to your investors, and being able to shake that out and understand the value behind it, really, not so different from, a lot of other fields, just structured in a different way.
And for those of you that didn't know, Neil had his MBA. He used the word quantitative. Now we know Neil's got it. Right?
Oh man, I busted here.
No, because they never heard me say that because I don't have an MBA, right? But
That's
so now your checklist, your processes, right? So we can see how that's creating out of the military. You've been able to create the same processes with whatever it is you're using that make that something that you can walk into something new, discern what's going on, make a checklist about it, run with somebody else's checklist, make it happen, and be able to successfully execute at any level. Where did you go with that company? I mean, you went from basic knowledge of real estate. I didn't hear any conversations about real estate knowledge prior. Are we missing where Neil learned a lot about real estate and then became a fundraiser? Did Neil goes from not a lot of understanding about real estate to fundraiser, learned on the job, put it all together in 4 short years?
Yeah, no, I mean, I had some personal interest in my previous firm, but really it was just, I would say something that I always knew I wanted to get into at some point. It wasn't like a burning passion at the time. And then, when this opportunity came up, it was kind of the catalytic moment to say, hey, I need to learn every single thing I can about this. So, I mean, really it was, everything from meetup groups to, webinars, a ton of reading, and what was useful. So I came in under an operations role where I was forming partnerships with other syndicators or other operators, and really getting a look under the hood. And to me, that was hugely helpful to start from an underwriting piece and go, all right, how do we break this down? How do we dissect this? And how do we basically unwrap this deal to see, is the sum of its parts better than what it looks like from the outside, or does it get uglier as I dive in deep? And not only that, but to be able to do it with different asset classes. So we had partners, for example, that strictly did multifamily projects in Northeast Atlanta. We had someone else who did multi-tenant retail in the Dallas-Fort Worth area. Another development group that did senior assisted living in NorCal. And getting to see all these different angles and work sponsor splits and work investor splits, and see how do you create value, how do you align incentives, and you start seeing trends, and it all kind of comes together at some point. And for me, that was about the 2-year point. And at that side, the founder was taking kind of a back seat with some personal issues, and I ended up taking a VP and eventually a president role of the company and running it.
Nice. So you really did go from bottom to top in that organization. I mean, coming in as operations, that's pushing buttons and pulling levers, and now you go. And I mean, that's no small feat, Neil, and that's something to definitely be proud of. But that wasn't enough, was it? That
It's
wasn't where the story ends, is it?
it's not, and actually, to be clear, I don't know where the story ends yet. But I can tell you where the story is right now. But yeah, one of the groups that I worked with that we raised some basically partnered as the equity arm kind of early 2016, 2017 was Mag Capital. And the model was interesting. The model effectively, single tenant net leased industrial, largely manufacturing companies. But before I jump into the model, what I found over time was, as I kind of worked with all these different groups, was the correlation of successful projects to sponsor groups typically didn't have a lot in common with the individual deals. It had much more, much higher correlation with the team, the quality of the team, the communication of the team, and really just, it made me reevaluate how I look at, deals. And that before I even looked under the hood, I started looking, at the team first. And the team I really connected with at a high level, is ran by some guys about my age, entrepreneurial, and really I felt like they had taken some risks in that they wanted to really not follow the herd, but carve out their own model in a field that, really not many people who, bring in private investors are doing. To my knowledge, I mean, they're probably one of no more than three people that are effectively syndicating single tenant net leased industrial through sale leaseback. And that really is our bread and butter, model. And it's fun being, kind of one of few players in a big real estate world, I guess you could say. And it's been fun kind of carving out our model and our brand within that.
So, question, Neil, everybody in America is programmed to own, right? I mean, from the time we're little, we own, those are my toys, and you own your home, and you, all of these things. Why would someone that's built a business sell the building? I mean, and because it's genius, because you've got the person that loves it like their own, but they don't no longer own it. Why would
Mhm.
someone sell the building that the business is in?
Yeah, it all comes down to, before looking at all the moving pieces, it comes down to where is your money most effective? To break down, what does a circumstance look like that makes a seller want to do a sale leaseback, right? So these are typically tenured companies. They're manufacturing, they're making car parts or frozen pies or white label cosmetics, or I mean, really, it's just the gamut is endless. And these guys, they typically have been family owned or kind of locally owned and grown in a very organic way, super low debt, just for that year over year, kind of 3 to 5% increase in sales and healthy EBITDA margins. And what'll typically happen is they've recently been acquired by private equity. And those private equity groups, they are geared toward rapid hockey stick shaped growth. And the way they do that is they look at all these different ways they can have capital tied up, and they go, where is my capital best used? Am I making the best use of my capital owning real estate if I'm a private equity firm, or do I get a better overall return by extracting the capital tied up in this building, just kind of sitting there appreciating, and redeploying that into my new portfolio company that I bought for a reason, because I think I can take this thing to the moon. And that is the underlying reason. They are saying, hey, we can get a better internal ROI by basically putting this capital into this business and taking it out of the real estate.
And I remember talking with my carpet guy about wanting to build a building. He kept coming back and I just put it to him plainly. I said, "Are you getting the best discount that the mill offers? Are you
Yeah.
really maximizing your price and terms on your product?"
Yeah.
He said, "No." And I said, "Well, then
And why?
why wouldn't you want to do that?" "Well, because I want to own real estate." I said, "But you're taking money out of your business. You're taking 20% down. You got a $2
Yep.
million business or building. You got to take 400 grand out of your business that you could be getting better price and terms. through this to get more revenue coming in. That your deal is about revenue. Your deal
Yep.
is not about buying these things. And even there's tons of examples of that, but that was one of the things that I put out there. I also really appreciate the fact, Neil, that you realize that we have a large Canadian audience and you've used the hockey stick there. We've got illustration here from Canadian friends that can pay attention. Hockey stick. So now you're able to you're working with these guys that are at Mag Capital, and you're able to really revitalize the cash flow, because everybody thought they had to own their business, or they built a specialized building. Now they've got that building. But isn't that an interesting correlation? Because your value of your building is based on the rent that you're paying. And now as an owner, they're in a conundrum. That shows you
Yeah.
what my level of education is. Conundrum, right? But you're now sitting there setting the rent on your building that helps evaluate the price point of your building based on what you want to pay for it long term. How do you guys deal with that as far as what real rents are, what assets are really worth, what rents are really worth, and what the buyout is?
One thing I really like about this asset class, and this is kind of a roundabout way to answer your question, compared to, let's say I'm buying a multifamily deal, right? I'm the buyer, you're the seller. There's a lot of little things we can negotiate, but at the end of the day, it comes down to price, right? And either you're going to feel like you won, or I'm going to feel like I won. There's usually, it's hard to be truly win-win in that scenario unless someone's a truly motivated seller. One thing I like about the sale leaseback transaction is we have two levers now. So we are negotiating price and we're negotiating rent, like you spoke of. And there's a lot of different scenarios, right? So one seller might say, hey, we're looking to maximize the proceeds from the sale. We are looking to pay off debt, and we're looking to reinvest in, new manufacturing lines, whatever it looks like. And they might say, hey, we want to sell kind of on the high end of the market. And we might turn around and say, okay, in return, you're going to pay on the high end of the rent spectrum in return, right? Because we need that yield. Or we might have a buyer who says, you know what, like, we're looking, for modest proceeds, but we're looking for really low rent obligation down the road. And in that scenario, we can go to them and go, all right, we're going to sell on the low end of the spectrum and we'll lease it back at well below market. And that's actually our preferred strategy there. And that what's nice is you're able to work with the seller in a much more, I would say, in a fashion that aligns interests in a much more fluid way. And the fact that seller stays with you because now he's your tenant or she's your tenant. And that, kind of motivates people to play nice in the process and not try to squeeze every last nickel out, because you know what? When you're my tenant, if you were a jerk when you were selling this deal, next time you're asking for a favor, I'm going to remember that. So,
well, and the other beauty of that is they're triple net leases. So when the light bulb goes out, they're not calling you, right? When the parking lot needs redone, they're not calling you. Restriping, when you got a major snow event, they're not calling you. That's all still on them. So their facilities manager still stays busy, right?
Yep.
The only thing that changed is their cash flow got better, because more than likely their rent went, or their payment for their facility went down, right? Because they're not contributing interest, or they're paying an interest payment. Really, they're not paying a principal payment on top of that. And all of the real long-term obligations that go with that are not there. So when you see that you do this, what typically happens on your pro forma on these when you're buying these as Mag Capital? Are you guys staying in them for 20 years? Are you guys looking at a 3 to 5 year horizon? What's your investment parameters on this, and where are you trying to go with those?
Yeah, no, great question. We feel we are building some value. There's a lot of kind of small incremental ways to build value. We feel one of the most direct ways is putting a brand new long-term lease in place and being the first owner of that lease. So our usual terms, 15 to 20 years. We don't plan to hold that long. We usually hold about 4 to 5 years for kind of modest appreciation, consistent cash flow. And really, we do a heavy credit look, and we can talk about that later, but we do a heavy credit look into the financial strength of that tenant company to pay their obligations, to include rent. And the longer you hold that deal, the more uncertainties there are on where that credit picture goes. But within about 5 years, typically you can know with a fairly high degree of certainty those obligations be met. And then we go and we sell that same building, still 15 years left to term on that lease, and we're able to sell to the next buyer who still has a lot of cash flow to be had from that as well.
That's a great model. So where are you sourcing these deals? I mean, what do you just run an ad on Craigslist? We'll buy buildings for cash. I mean, you know, it's a little difficult when you're talking about the size and scope of the buildings that you guys are taking down. How are you sourcing these?
Yeah, no, it's a great question. It's a mix. There are some direct, kind of private equity backed deal flow. But most of it's still done through, kind of more traditional commercial broker relationships. So, the amount of, I would say, national scope sale leaseback experienced brokers, it's probably, just a couple dozen max. So it's a really, kind of narrow subset skill, specialized skill that most commercial, real estate brokers don't have, or just haven't done enough sale leaseback to be the go-to representative for this transaction, just because like we said, it is a more complex transaction. Most sourcing, we sell from the same small group of people, and one of our principals, actually both are commercial real estate brokers, and most of the acquisition flow and selling flow goes through them.
Yeah. I see that as being a very niche business, but a very necessary business. So who are your investors?
Yeah, we have a mix. It's high net worth, it's family office, it's some well paid retail investors, and we get the right group in place to have reliable capital and be able to effectively close the investment in short timelines. And that's one of the ways we've been able to compete against larger REITs like, say, Store Capital or Stag Industrial, who are big publicly traded single tenant net lease investment firms.
I think if I were the guy selling my business back, I'd want to work with a smaller outfit. I wouldn't want to just be thrown in the machine of someone like that. Not that there's anything wrong with that. There's some people that like to be tossed in the machine, but just to know that you're dealing with a smaller operation would probably be better. What kind of are all of yours 506Bs, 506Cs? Are you dealing with accredited investors only? What are some of the requirements that people that want to get involved with you are going to have to be involved?
Yeah, so our particular deals are direct investment, meaning it's not a fund. We set up a specialized special purpose LLC, takes ownership of each one. Ultimately, we do about 9 to 10 projects a year on average. And the way we structure most of these is 506B. So we have, really kind of built a kind of loyal, reliable investment group, and that group is who we include in these offerings and how we get funding.
This is not an advertisement, so maybe what kind of returns your investors are getting, so that those that are listening to this that are interested would kind of be able to bracket. Obviously every deal's different. We're not giving advice here, but what is it that your investors usually get besides not having to deal with any of the headaches of ownership?
Yeah, no, great question. From a cash flow basis, and I'll compare this to, say, a more common, say multifamily, right? Multifamily, you tend to come in, you're buying an underperforming asset. You have a business plan in place. After you take ownership, you say, we're going to paint, we're going to change cabinets and flip countertops and all this stuff. We think we can improve rents. We think we can improve occupancy. But there's execution risk there, right? We on the other hand, it's more of a defensive play. We're coming in, we have a 100% occupancy, fully occupied building. There's pre-negotiated rent bumps in the lease, so we know every year with a high degree of certainty that rent's going up. And ultimately, so it's a defensive cash flow play first, and that cash flow typically, from a cash on cash basis, starts from day one, and it's usually between 7 and 12%. So
that's mailbox money. I mean, that's the kind of stuff that you can count on every month to pay your mortgage and your electric bill and your car payment and all your bills. I mean, that's not speculative money. And I love a value add investor guy just as much as everybody. I'm in the development space, but even I look at value add as a little different, right? Because is that you are taking my word for it. I am thinking that I can do this. Even in the development space, the bank doesn't take my word for it. The investors don't take my word for it. We get appraisals. Your built-in cash flow. You got signed leases. You got credit-worthy tenant. I mean, all of those things are part of the pluses and minuses that make a great deal, right? I don't produce cash flow on day one. Value adds produce cash flow on day one. You produce cash flow on day one. So for that, so your investor profile is usually looking, they've made the pile of money they want, not necessarily at the end of life's road. We don't want to use that.
Yeah.
They are looking to get to the point where they've got cash coming in instead of all their cash going out, so that they can live their life without that job chaining them down to something. And they're looking to, fire up the motorhome and go see the world. I mean, maybe not 100 countries, but they'll try to get there, right, Neil?
100 states. Wait. No.
Yeah. So they're a different profile, but they're looking for that security that says, yes, it's asset backed. Yes, it's backed by real estate. Yes, it's cash flow, and yes, it's backed by the balance sheet of a large company.
Yeah, no, absolutely. And the same way, I mean, just to use a tradable markets comparison, when you're young, you're probably going to have more stocks than bonds, right? And not to say you shouldn't have any bonds, but and this is back in the day when bonds actually produced something. Imagine that world. But you would start on a riskier stock play, and then slowly, as you kind of approach that motorhome age, your portfolio would transition. And this really is no different. When you're 30, you might have more, big value add potential or development deals with a smaller amount of passive income. And then as you kind of grow, I think there's a case to be made that, you want to start adding on additional, really reliable passive income. And these, for what it's worth, these have a profit split on the end. So, all full cycle with appreciation, we've been able to return on deals we've bought, held, and sold high teens in terms of average annual returns. So typically
those are phenomenal. You're getting cash flow from day one. I mean,
exactly.
Like a friend of mine says, there's a butt for every seat, right? There's an investment for every This is one of those. And that's the thing that we try to do here at the Real Estate Rundown, is just provide more information, because not everybody wants to be a wholesaler, right?
Yeah.
Not everybody wants to be a fix and flip guy. I went all the way in on my first fix and flip. I bought a house for $5,000. I moved it a mile down the road and put it on a basement, right? Needless to say, Neil, I only did one, right?
That's all it took.
That's all it took to clear me in. But there is an investment for everybody. So with that being said, Neil, where can people find you and Mag Capital?
Yeah, so we have a website with some general info. It's www.magcp, nice and easy to remember.com. And personally, I love to hear feedback on the show. Any questions, or if you're interested in talking more about joining the investment group, just drop me a line, either Neil, Neil, like Neil Diamond, at magcp.com.
That song stuck in my head again. Thanks, buddy.
Exactly right. I mean, he's one of the greatest artists of our time, right? So gotta give Mr. Diamond a little love. But yeah, just drop me an email there, and I'm happy to discuss more.
Awesome. Well, Neil, I appreciate you taking time out of your flying schedule and all that you're doing over there at Capital to sit by and talk with us. I really appreciate you giving that information to our listeners here on the Real Estate Rundown. We super appreciate it, because we know that our job here at the Real Estate Rundown is to help investors understand what they want to do and then execute on that through education. And that's really what we're trying to do here, is make a smarter investor, so that we wind up with less sad stories and difficult situations that we're, being the shoulder to cry on. So Neil, I really, really do appreciate you stopping by here on the Real Estate Rundown.
Thanks for having me, Shannon.
And guys, don't forget to follow us on the Real Estate Rundown. You can find us on YouTube, or hit us on Spotify or iTunes, where we are on the podcast list there. You can follow us there. Follow us on Facebook, Twitter. We're in all the usual places, and you're going to find Neil's information below. It's going to be right here in the links. We really appreciate you guys stopping by the show, and we can't wait for you to come by the next episode, where we will talk more about real estate, because that's what we do at the Real Estate Rundown. Thanks, guys. We'll talk to you soon.
That's a wrap for today's episode of the Real Estate Rundown. Let these newfound strategies pave the way to start a successful career or a profound rebranding. If you loved everything you have heard, listen to more conversations at www.shannonrobnett.com. And be sure to leave a rating, share it with your friends, and subscribe. Until the next episode.